The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 29th, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside that subject heading, put radio show question. And, of course, inside your Tiger's Den, any ping will do. So let's go ahead and get this show started on Magnificent, Marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We've got the U.S. indices all trading to the downside. Dow about 226 to the downside, 31 for the S&P, 174 for the NASDAQ, 100, 16 for the Russell, 106 for the trannies, 77 for the semis. We're going to start our day with gold down $200. Silver's also down $55.70. So there's a 4 and a 7% move out there. We have been warning about the need to be very cautious in the gold market. And why? What were the reasons? Well, one reason was you've got a daily TD9 count top inside of gold. That remains in place. That happened 2 days ago. Today, you're clearly going to get a Rhodes Momentum Indicator top. You got a nice big old bearish engulfing candle. Yeah, it looks like that's what you're going to get. Does it matter if we have two tops? It doesn't. What matters right now is that price is trading below. Let me just check on one thing on this chart, if you don't mind. I can't tell if that profile's gone away, but I will be able to make that determination here. I just need to take a look at one thing. C1 setting. There we go. Yeah, it's going to come back now. So let me just change that setting. You should see a new profile that forms. There we go. Inside of Goldilocks. It's kind of hard to see. I'm going to open up the screen itself because it's brand new, but you can see, you can sort of see the black digits. So the resistance level up at the top, 45.57.20. The support level or the buy zone for this is between 43.42.80 and 43.69.60. That is your buy zone. Price is trading into the buy zone right now. If price closes below the buy zone, odds favor a move back to 42.31. Now, if we take a look at the daily charts out here, we've had basically a 1, 2, 3, 4, 5-day rally. So a normal pullback in a market like that is 2 to 4 bars out here. If price breaks through support, close below that level of support, I would expect we see at least bar number 2 as price moves down to the 43.21 level out there. If we take a look at the weekly time frame chart, now it's just the beginning of the week, but we're off to a start where we negated the TD9 count top last week, but we triggered a Rhodes Momentum Indicator signal, and therefore a bearish reversal candle at month's end will create a Rhodes Momentum Indicator top. Price is trading just below the weekly oscillator and change line, which is at 43.85. If we take a look at if price were to close below that, then the profile levels come into play. So take a snapshot of the screen if you are long or short gold, whatever you are, because you've got 41.98 as potential support, 40.41, 38.85, and even all the way down to 33.81. So top on the daily, likely to see a top on the weekly. Can't be guarantee that just yet, but off to a good start. And a TD9 count top is going to form at the end of the month out here. So you got tops for all three time frames. We open up the monthly one. the monthly chart, that is. What we can see out here is that price has rallied for at least four. Maybe this is going to be the fifth consecutive month out there. The last couple of 4-month rallies have led to 2- and 3-bar retracements out there. They've been relatively small, but still retracements where you saw lower closes at the end of the month. Would not be surprised that we see at least a 2-month pullback out there, a 2 to 4 month pullback. That's the natural, normal dance steps of Goldilocks out there. So that's what's going on with regard to gold. Let's go turn on silver out here. Take a look at its charts and see what it is signaling to us. We can take a look at intraday signals and things of that sort. But right now, I believe with regard to gold and silver, it's not about the intraday signals other than some intraday rallies or bounces or what have you. I think this is more important to be looking at understanding the daily, weekly, and the monthly time frame. And here we take a look at the daily time frame. This negated a TD9 count top last week, but a bearish reversal candle. Right now, we've got a bearish engulfing candle that would confirm a sell the D point top. The key level for silver is going to be its oscillator and change line. And the price closes below that. That's at $70.77. Then we're likely going to see price make its way back to profile levels. Could be 63.43. That would be the first one. Could be 57.67 to 57.99. I think that's the more likely outcome. But first, one step at a time, price has to close below that oscillator and change line. The weekly time frame completed a TD9 count top last week. So that suggests that price at a minimum should pull back to 62.90 or so. So that's going to get us back to the top of the profile for sure at 63.43 on the daily time frame, and then likely below that level. On a monthly time frame, we complete a TD9 count top this month. Pretty wild, isn't it? That you could actually, that all these charts topping out right around right now when there's that potential. The reason why gold and silver metals are selling off is simply because of the potential for peace out there. You get, what do they want? The Miss America world peace. We might get it. Who knows? But if we do, okay, there's a ginormous premium that is inside the metals out there. And, the first thing you need to see here, at least the first thing, is a start to beginning of a series of lower highs and lower lows out there. So right now, price at support in the daily time frame, but I'd say, very cautious. Now, let's move from here over to the intraday time frame charts for gold. So I put those up on the, before we started this, let's put those up. Oh, I didn't. See, yes. All right, well, we'll change over to gold. Darn it. Okay. Let's just change over to gold right now. We got enough time. GCO2 dash. So we're just going to see what other intraday chart signals are out here that we can key off on, if anything. And so we just got to let these charts here populate. So, we're near support, potential support on the daily time frame being the bottom of its profile. If that support is going to hold, what we should see is some kind of bottoming patterns on the intraday time period. So let's start with the 10-minute time frame. On the 10-minute time frame, I don't see any kind of a bottoming pattern out there. I see a TD9 count on the 15-minute chart. Price should rally up towards 43.70-ish out there. If price can get above 43.70-ish, we should see a move to 44.03 to 44.15. No bottoming pattern on the 30-minute, nor on the 60-minute. We have a TD9 count pattern that is going to form. A TD9 count bottom will form at 12 noon. It will complete at 2 p.m. out there. So that's got the potential for a decent rally right up to about the 44.85 level. No bottom on the 240. Price sitting at support on the 5-hour TD9 count breaker level, 43.50. We are definitely sitting at an area of support where you could see a decent rally out there. I think watch the 15-minute time frame chart. Can price clear the oscillator and change line, and can price clear those profile levels? Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. And we take a look at the silver charts out here. Again, just a reminder, the daily is sitting right now at the oscillator and change line. If we think that that's important out here, just look at the historical. Their price has not been below the oscillator and change line since November 25th out there. That changes. That suggests that we move back to the next level of support again, that being 63 out there. But because we are at a potential level of support, do we have any intraday timing signals? Well, the 240-minute TD9 count top did make its way back to its breakout level of support. So one area to watch is going to be 70.16. We don't have any, the next bottoming signals come from the 30-minute and the 15-minute chart, both which have TD9 count bottom patterns. The key level there is 70.25. If price were to close below 70.25, it would negate the signals out there. But let's leave 70.16 as the real key level, that if price closed below, that's going to suggest lower price. Now, we should get some counter trend moves out here. I would say 72.55 is a likely move. That is the 30-minute oscillator and change line. If price can close above that, that would be a positive, would get us up towards the 74.23 area out there. So that's what's going on with silver. If we take a quick peek in, just to kind of put the metals side of this all together, we take a look what's going on inside of the GDX. The GDX today is forming a sell the D point top. We have this little gap to the downside. What's most important about the GDX is going to be the bottom of its daily profile. That's at 84.45. If we close below that, we're likely headed lower. Headed lower to where? Well, if you look at the weekly profile, new profile, bearish structured profile that is formed, 83.98 is the next level of support. So you go from 84.45 to 83.98. And the price closed below 83.98 because it's a bearish structured profile. And then the fact that we'd be trading below its oscillator and change line and the center of that bearish structured profile, odds would increase that sellers could push price down to the bottom of that profile, and that's at 74.37. So where's price of the GDX likely headed? Well, first you're going to complete a TD9 count monthly top out here as well. And so longer term, bigger picture out here for the GDX is going to be 66.13. Above that, we're going to be looking at 74.37. Above that, we're going to be looking at 84.45, and above that, 83.98 out there. Those are the numbers for the GDX. You can see it formed a nice little TD9 count bottom earlier this morning. Price rallied right up into profile resistance at 86.95. So it's a rally. It's a little counter trend move is likely over. Does that cover it for... I'll give you this chart here for those of you that take snapshots of my screens. Here's a chart where you can combine the daily and weeklies for both gold, silver, and the GDX. And that way you've got some of those numbers very handy for you. So I hope that helps you out. Let's go to, we haven't looked at the equity markets out here. So let's take a quick peek at those. Then we'll start getting to the requests that have come in. So let's start off by taking a look at the daily cash indices out here. Just let's see what we see out here. So here's what I see. I see in the S&P 500, the Dow itself is populating right now. The S&P 500 is traded above its green oscillator and change line. That's a positive. The Dow is testing the oscillator and change line at 48,548. You close below that, it's lost its momentum. In the case of the S&P 500, the number is 6890. In the case of the NDX 100, we're trading below that level right now. It matters where it's at day's end at 25,498. That's its number. 25,443 for the Russell. In the case of the semis, trading below its oscillator change on to 71.85. The Dow Transport's the same thing. The Nasdaq Composite, the same thing. New York Stock Exchange, the number is 22,114. So closing below a green oscillator and change line is just a signal to you and I that the indices will have lost its momentum. Now, if we take a look at the seasonal pattern associated with the equity markets, I'll just use the Dow for this moment in time. And this chart here, as you can see in the left-hand corner, I've got the events button triggered and New Year's. And the red vertical line represents basically New Year's Eve when the market is also open. And what we can see here, this takes a look at 10 days before, 10 days after. What does this typically tell us? This typically says, now this is over a period of 128 years. So over the 128 years of tracking the Dow, 127 events, because next New Year's Eve obviously comes up in a couple of days out there, and we're in a bullish mode out here, time zone. If we take a look at, back it up to 25 years. 25 years says, so we're, 3 days before the holiday, we should head lower tomorrow, then a little bit of a move on New Year's Eve to the upside out there, and then we continue to move higher as we normally do into January. It's usually around January 6th, 7th, 8th, or what have you. Out there, that's the 25-year. If we take a look at transpired over the last 15 years shows that really kind of a flat market after a nice rally into Christmas out there. That's 15-year period. If we look at the last 10 years, again, that would just be 9. We also have a flattish style market. So those are the seasonal patterns associated. Which of these ones is going to kick in? Well, with the oscillator with price being below the oscillator and change line, that says the ones that are more flat. Maybe to just a tad lower. There was what I think it might have been the 15-year that was traded lower for a couple of days out there. Look, if you look at the bottom panel of these charts, you're going to see that today would likely be day number 2 to the downside. So it's normal to get a 2 to 4 bar knee-jerk reaction low out there. That's all that we're looking at this moment in time. How do you know that, Steve-O? Excellent question. The way that I know that is by taking a look at what all 3 daily cash indices are doing for an index. In this case here, I just happen to have the S&P 500 up on my screen. Let me just say, never has there been a major bear market without a topping pattern in the S&P 500 for its monthly time frame. Do we have a topping pattern right now? Well, we actually are potentially. Let me see here. I think the answer is no. I just want to come back and make sure. Yeah, I've got that answer is no. I've got this more as wave number 2 than I do wave number 7 out there. So no top. You get a bearish reversal candle, different story. We don't have that. If you take a look at the weekly time frame, no topping pattern out here. It too has a wave number 7 signal, so you could get a. And this one here is this one is real. So that's a real wave number 7. You get a lower high this week. That could be a top out there. Really, a bearish reversal candle would really be the one that you'd be looking for to generate a Rhodes momentum indicator top. At this stage here on the weekly chart, what you really have is just an inside bar. And you know, the meaning of inside bar is the direction that price has been coming from. It will continue on. That would say to move higher. And then finally, if we take a look at the daily time frame negated a TD9 count top. It did that on Thursday. It did that on Christmas Eve. The day after Christmas, price rallied a bit further out there. actually kind of closed unchanged for the most part. But right now we've got a Three River Evening Star candle formation. So for the daily time frame, I believe there is a sell the D point top that would be out there if in fact we get that Three River Evening Star. You must have topping patterns for all three time frames, daily, weekly, and monthly. Don't trust me on it. Go back and do the data out. Go back and do the work yourself, and you'll see that every single bear market, all three of these had topping patterns. That is not what we have going on at this moment in time. If we take a look at what's going on with regard to the New York Stock Exchange, it's advanced client oscillator. The advanced client oscillator is just below the zero threshold level. Even if it closes below that today, it would need a second consecutive close below that tomorrow to suggest that sellers are the ones with an edge. In the case of the spot VIX index, this 50-day exponential moving average is all the way up at 1694. We're quite a ways away from that. That provides buyers with an edge out here. Can you have one chart that's got sellers, the other's got buyers that have the edge? The answer is yes. When we get that, we typically see sideways-ish type markets out there. Kind of like what we looked at for a couple of those seasonal patterns out there. Steve Rhodes with TFNN. We come back to this break. We're going to look at RGTI for Tom G, Ethereum for Tony, as well as BMNR. Duncan Steve wants to look at the SMHs, ASML. We've already looked at the seasonal charts. Of course, anything else that you'd like as
Building
well.
wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. Hope everybody had a great holiday weekend, like nice extended weekend. I'm looking forward to this next one as well. We've had just simply Chamber of Commerce weather down here. I know it's been rough in other parts of the country, very rough in other parts of the country. We're about to get a cold spell through here. Cold spells for us. And this one here, we're going to be in the low 40s overnight, or mid 40s, I think, overnight. And then the middle to upper 60s. That'll last, looks like, through Friday out there. So a bit cooler for playing golf, New Year's Eve, New Year's Day, and so forth out there, Friday, Saturday, and Sunday out there. But I had just simply the best Christmas ever. I mean, it was fabulous. Lots of great family stuff. In any event, let's take. I hope you did too. So let's take a look at the RGTI. And this is for Tom G inside the Tiger's Den. Not inside the Tiger's Den. Tom's not inside the Tiger's Den. So Tom's real question is, what do we see here for RGTI? And the first thing we see daily and weekly is a push to the downside. We are trading below profile support. Profile support on the daily is 2280, 2321 on the weekly time frame. We closed below that profile level last week. If we close below 2321 again, you've got a bearish profile change in trend. Now, the only thing that you would have going for you is that this would be 4 weeks in a row to the downside, and that would then say that you should at least rally or could rally out there. Right now, what's holding things up, so to speak, really two things. The daily time frame, price is trading into a bullish hammer candle that had formed out here on November 21st. Now, when that hammer candle formed, we looked at the A to B equals CD pattern on the downside. We said, has this completed that pattern? And the answer was, we don't know. It looks like maybe it could out here, but we just don't know. And the reason we don't know is because that hammer candle is quite a ways away from the actual, well, it looks like 2009 maybe is the price projection level. We got down to $21 out there. So, but you got to close below that hammer candle. Again, that low out there, I don't think I gave that to you, is at 21 even Steven. I guess I did. And if you close below that, you're headed lower out here. The 2142 level is an area that's holding the support. That is the top of the monthly profile. So 2142 is a key level to be observing, and then $21 even Steven. But everything that we're looking at here, daily, weekly, maybe even monthly, is suggesting downside pressure for RGTI. If you look at the daily time frame out here, the daily time frame, what we see are nothing more than 2 to 3 bar knee-jerk reaction rallies out there. So that's been pretty consistent ever since the TD9 count top that's in place out there. And that pattern likely exists until it stops existing out there. But that's one place for you to take a look at, Tom, is if you do take this to the long side, 2 to 3 days is likely it. And then you could flip it over to the short side. So continue to watch that pattern as well. So I hope that helps you out. As always, thanks for your request. Happy New Year to you. Tony wants to take a look at Ethereum out here. Let's go take a look at ETH, which is we're looking at the January contract. January contract right now, trading out at 29.44. The monthly and the weekly does not provide us with profile levels out there. We don't see any kind of a bottom pattern at this moment in time for either of those time frames. But really, Tony, I think it's all about the daily for you and I. And right now, the daily time frame shows that price is trading below profile support at 30.62. Today's rally, which took price up to 30.74, found resistance at that level. If you can't bust them the upside, you try to bust them the downside. The downside level right now is going to be 28.51. That's its oscillator and change line. If we close below that, we're likely going to, we would be inside that swing point from the trading day of November 21st that has volume of 5,400 contracts out there. So if you close inside that and you do it with more volume, you're likely going to go target the low of 27.13 out here. I see a series on a weekly basis so far of lower highs out there. So that tells us about the pressure to the downside for that time frame as well. So that's what we've got. We take a look at Ethereum, Tony, for the January contract. Hope that helps you out. You're also interested in BMNR. So let's go pull that set of charts up on our screen, see what they are communicating to us at this moment in time. On the daily time frame, you can see that price is trading below profile support and a red oscillator and change line. Not only does it tell us it's lost momentum, it's telling us that it should continue to head lower. And it should target its profile. It should target its swing point from November 21st. And that's anywhere between the range of 2433 to 2677. Volume there, 55 million shares. On Friday, you came down with 32 million shares. So far today, 15 million. That's a 45 million share day in a trading holiday. Some pretty decent volume out there. Watch to see what happens as price approaches that 2677. Do you test a rejection with lighter volume, or do you close inside it with volume, in which case that would say you're going to get down to the lows? On a weekly time frame, you have price that is trading with inside a new profile that formed last week. Your key level of support here to be watching, Tony, is 2639. Resistance up at 3872. I do not see any kind of a weekly bottoming pattern out there. The daily, maybe it had a buy the D point bottom. Let me see here. What could you get away with there? It had a buy the D point bottom pattern out there. That's that Three River Morning Star. That price is trading into as we speak right now. And finally, on the monthly time frame chart, all you have here is a consolidation with inside its profile, but you have price right now trading below its green oscillator and change line. So that says you've lost momentum. That's at 29.28, and maybe you want to get down to test support, and that's at 18.98, the bottom of its profile out there. So that's what I see. I see it looks like a pressure to the downside. Next support level is going to be at the bottom of that weekly area, 26.39 out there. And then you've got to contend with that swing point from November the 21st out there. Let's go on to our next request, which comes in from Duncan inside the Tiger's Den. Dunk would like to take a look at the SMHs out here. So what's a semiconductor index ETF doing? Turns out the pullback this morning, no problem, testing that green oscillator and change line. That's after being trading higher for 4, 5, 6 consecutive sessions out there. You got to expect price to retrace out there. Is this one-day retracement? Well, if it closes below the green oscillator and change line, 362.83, give that 83 a few cents or so. If it closes below that, then I would say we likely have day number 2 to the downside. Price is trading above the top of its profile. Your support level is 356.83. The area where a counter trend move, should things get moving to the downside, would be between 353 and 356.83. The weekly time frame for the SMHs, you've got a Rhodes momentum and TD9 count top, but price remains above the top of its profile, 351.36. We've got to go with a neutral signal there, Dunk. And finally, on the monthly time frame, no topping pattern whatsoever. Again, those folks that are in the bearish, we're going to start some kind of bear market. That ain't going to happen. Not without the SMHs giving you a trigger signal, and we don't have that. It did have a wave number 7 signal that was negated this month. There is no topping pattern out there for the SMHs for its monthly time frame. Steve Rhodes with TFNN. We come back from this break. Let's take with ASML and any other requests that have come in as well. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's get to our next request out here. This next request coming in from Duncan Steve wants to look at ASML. We'll get over to its set of charts out here. So at ASML, trading out right now at 1067.34. It is trading with inside its daily profile. You've got support at 1021.78, and you have a sell zone between 1092.43 and 1115.98 out there. Price is trading below its oscillator and change line. You have a daily Rhodes momentum indicator top out there, with price trading below the sell zone out there and its oscillator and change line. It ought to be able to push price back towards 1021.78 out there. Today is just triggered just a slightly lower low out there. So maybe that's what it's telling us is getting ready to do is move lower. But it can't move lower, Steve-O, until price takes out and closes below its weekly oscillator and change line. We have a Rhodes momentum indicator signal that is present, but we do not have a bearish reversal candle to confirm its top. So right now, ASML Holdings is pulled back to support being its oscillator and change line, 1068. If we close below 1068, we're trading 1066. If we close below 1068, that would suggest lower price. The monthly chart does not have a topping pattern. It's testing a prior swing point high from back in July of 2024 out there. And the volume was 34 million shares, and the high is at 1110. So far for this month, we are at 24 million shares. So you had 24 going into 34, likely going to come up much lighter on volume. So that says be careful, because you would have a test and rejection of a swing point on lighter volume. I would say you got a daily top, a weekly, not so much just yet out there, but watch your price loses that oscillator and change line. If it does, and you end up with a test rejection of that swing point with lighter volume, odds would favor that move lower. That move lower again, 1021 being that first price target area. But get even though we say that, you still have got to close below the weekly oscillator and change line. So I hope that helps you out with regard to ASML Holdings. GTE writes in, would like to take one of his favorite stocks, XPEV. He's looking for the TD9 count patterns out here. So if we start with the daily time frame, we are at bar number 6 to the upside today. What you're also going to get today is a bullish profile change in trend signal out here. And that suggests that we head to higher ground. Where is higher ground? Excellent question. The next highest level of ground before you deal with some resistance is 2102. So odds favor that XPEV gets up to 2102. If it can clear 2102, 2180-ish, it's oscillator and change line. And if it can clear that, then we're off to the 2514 area, the weekly top of its profile. The monthly time frame chart shows we are in bar number 5 of a TD9 count to the upside. The daily, by the way, it's bar number 7 to the downside out there. there. So those are the counts. These are the charts. I would say that XPEB wants to rally further out here. So hope that helps you. Let's go take a look at OKLO. This is for ELO inside the Tiger's Den. And let's go see what this is doing and what it's trading at. So, Oklo's, ever since it formed that daily TD9 count top out here, and that is on the trading day of October the 15th, it has been careening lower. Now, that day closed out at 193.84. Have both a Rhodes momentum indicator, a topping signal, and a TD9 count pattern. Price closed below the bottom of its, or the daily weekly hammer candle on the day of December 17th. Now, we are in wave number 7. That is letter G. That has been triggered today. That needs a higher low in order to confirm that bottom ELO. So that's one for a potential bottom. If we take a look at the weekly time frame chart, Oklo is going to form bar number 9 this week, as long as price closing below the close of bar number 5. Seems pretty likely out here because of the close of bar number 5 is 104.67, and we're trading at 75.07. So the weekly is going to form a TD9 count top this coming Friday. It'll complete that pattern the following Friday. But because it's so, the question is, does this wave 7 bottom signal on the daily time frame hold? If it doesn't hold, then that's telling you lower price. And by lower price, I would say that means that on a weekly basis, price likely doesn't bottom until the bar following bar number 9. The monthly time frame chart shows that price is testing oscillator and change line support. We're trading just below it, it being 76.34. We're trading at 75.14. And if we remain below that, odds would favor a move to 70.35. 70.35 would be the next level of profile support. A close below that, and that would bring 35.06. So we go from 109 just 3 months ago all the way down to 35.06. We are not there yet. Okay, so the daily and the weekly are the ones to keep an eye on out there, ELO. And the only bottom on the daily that you've got going for you is that wave 7. If that goes away, odds favor that it's not until next Friday that we see that potential bottom inside of Oklo, OKLO. Thanks for that request. GT writes in and would also like to look at the Hang Seng. So let's pull its charts up on my screen. I was trying to just let me repopulate this template here because the bottom portion of it got messed up. So let me put this in here. 2-panel. This is the index, 2-panel index. Okay. And I just need to make one change here. The oscillator change line is going to be set up as the daily time frame. So we're going to go ahead and change that to the weekly. You can see it's a little bit squiggly. Should be more, where's it? Daily, weekly. Should be smoother, like the monthly chart, as you can see. Now it's much smoother out there. So with regard to the Hang Seng is testing a real key level of support. So what we know about the Hang Seng, you've got the TD9 count top for its monthly time frame. So longer term, what we've seen take place since then is we've seen some lower highs. This is telling us, and what should unfold eventually, is price getting back to the oscillator and change line. The current print is 24,118. That's the monthly signal. Now, the weekly signal shows just a sideways-ish type of a move out here. We had a one-bar rally at this, but we're too far in. We're just beginning the week, so it's hard to say what this is going to do. But, and here's the but. If you, well, no. The weekly chart shows a consolidation. So let's actually draw that in here. So sometimes when there's silence, that's Stevie's mind churning out here, looking for the best pattern or best information to be able to give to you. And this is what I now see. I don't see any sign of any A to B equals CD pattern to the downside. This retracement here on November 14th was too high a retracement to use as a B point. So I don't see that. I just see a sideways consolidation on the weekly time frame. The bottom of that consolidation here, GTE, is right around the level of 25,145. Now, you'll get down there if the daily closes below the red oscillator and change line. That's what it basically tested last night. 25,626 is the number. We got down to 25,630 last night. So if you close below that, on the daily time frame, you're likely getting back to the bottom of that weekly consolidation. And don't forget, longer term, 24,118-ish continues to stick out there. That is all the requests that I've got in. That's a beautiful thing. We come back from this break. We've got some others. If you didn't get time permitting, can we take a look at NVIDIA? And the answer to that question is absolutely. So we come back this week. We'll have those charts prepared for you for NVIDIA, NVDA. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
So the charts of NVIDIA show that we have a bullish profile change in trend. We closed above the top of that daily profile early last week. There's no reason for it not to rally further on the daily time frame. The weekly time frame says, well, hold your horses, Stevie. The rally ended at its oscillator and change line last week. That's currently printed 192.27. On a weekly time frame, prices just consolidating with inside its profile, but we know that oscillator and change line is your key level of resistance. So, Dunk, you need to see it close above 192.27 for NVIDIA to continue on with its rally. On the monthly time frame, things look okay here. I don't see a topping pattern, so longer term things look pretty decent out there. So watch that weekly time frame, that weekly oscillator and change line. Vic wants to take a look at Barrick Gold. Let's put that set of charts up on our screen out here. Barrick Gold charts look really pretty good. If you look at that monthly time frame chart, you may end up with a negated TD9 count top. Don't know if you will or not at the end of the month, but a close above 31.22 would just accomplish that task. So that's one thing for you to be watching out there. Vic, on the weekly time frame, no top that we see in place out there. The daily time frame, no top in place out here. Let me just make sure. The high, 34.71. The close, 34.79. Yeah, no top in place that I see. Maybe there's a sell the D point. Nah, that didn't even have a gap down. So the day looks pretty good out there. Support, by the way, for this is going to be down at $30.56 out there. Finally, let's finish the show. Take a look at McEwen Mining. MUX is the ticker symbol out here. You're looking for an entry point. That's going to be very tough for me, Texas time, to give you an entry point. Oh, geez, it wasn't even here. What BMNR? That's not MUX. Let's try this. Let's try McEwen Mining. Here we go. So on the monthly chart, looks good. Needs a bearish reversal candle to confirm a top. TD9 count top on the weekly time frame. Price consolidated with inside its profile. You're trading, kind of a sideways action really on the daily time frame. So this is held up pretty well. But here's what I'll do tomorrow. I'll run the reports using my black background system that shows you the directional correlation between gold and the mining equities. And I'll choose some of these mining equities as well. Have a magnificent Monday, folks. I'll see you later on with Tommy. Otherwise, hopefully tomorrow morning, 11 a.m. sharp. Take care. Be safe out there.